Hey, welcome back. We're still watching a Business Money here on Business Day Television. Now let's go straight to the first conversation for today. Nigeria's CBN Governor Cardoso reaffirms collaborative approach to economic coordination. Olayemi Cardoso, Governor of the Central Bank of Nigeria, CBN, has reiterated his commitment to stronger collaborations between monetary and fiscal authorities as the country seeks to stabilize its economy and even restore investor confidence. Speaking at a public dialogue on October 10, 2025, hosted at the Wheeler Institute of London Business School, Cardoso emphasized that effective economic reform depends on clear communication, credible data, and synchronized policies. He said no central bank can stabilize an economy on its own and called for robust coordination across government to manage inflation, currency volatility, and even fiscal imbalances. Cardoso's remarks come amid growing efforts in Nigeria to align the central bank's actions with government fiscal strategy. In March 2025, he and Finance Minister Wale Edun held talks aimed at enhancing coordination between monetary and fiscal framework. The government has also publicly backed the idea of synchronized planning, particularly in areas like debt management, revenue mobilization, and public expenditure. He has placed particular emphasis on transparency and shared data flows in recent reforms. The TBN has sought to improve trust through regular public communication and by aligning exchange rate policies with the realities of supply and demand in the foreign exchange market. Now, earlier in September, Cardoso used a fireside chat in Lagos to reaffirm that the CBN's flagship banking sector recapitalization was on track and that inflationary pressures through still high were gradually easing through collective efforts. But for now, Cardoso's pronouncement marked a rhetorical shift toward unified policy making, and the next test will be whether that unity can hold up under the pressures of economic stress and political realities. And now joining us this morning is Mr. Mokhtar Mohammed, CEO Finance by Mokhtar, Policy Coordination. And he is here to give us a lot of information on this matter. Good morning, Mr. Mokhtar.
Thank you for having me, Destiny. Good morning.
I quite appreciate your joining on the short notice. Okay, now very quickly, talking about the policy coordination and even vision, Governor Cardoso has emphasized stronger collaboration between the physical and monetary arms of government. How is this coordination structured in practice, and what mechanisms ensure consistency in these decision makings?
I don't definitely agree that there's been a coordination between the physical and the monetary side. I personally think that where we are today is mostly driven by what the monetary policy have made. And if the physical side have done enough, maybe our current inflationary decline would have been more. Because again, you're looking at the physical side, but sometimes people look at the physical side, they only look at the federal government, they're not looking at the state government and local government. If you look at in terms of allocation that have come to that tier of government, it has been high, but it's not commensurate with what the people are seeing on the ground. And you have to know, Destiny, that the Nigeria is an informal economy, largely driven by the informal economy. And the informal economy should feel the impact of the local government and the state more than the federal. The federal is just to augment in terms of infrastructure. So if Cardoso is saying that synergy, I don't see it. Maybe in the between the CBN and the federal government, we could see a little of that. Even with that, it's not all dust and dusted, because again, done and dusted. Again, if you look at some of the policy of the physical side, when the CBN is trying to tackle inflation, you look at cost of governance, and when cost of governance has gone up, you're also looking at a lot of liquidity in the system. So I don't think there's been a coordination. Maybe there's work towards that coordination. Even if you look at the tax law that is about to be put into law, realize that the state governments normally strive on levies. I don't think they are so open to that tax law, because that means you have to cut a lot of their levies for the sector to begin to pay taxes. But like I said, it's an informal sector, and informal sector definitely is difficult. There has a lot of difficulty when it comes to tax payment. And that's why both state and local government think that sector strive more on levies. And that is why you can see that disjoint
Uh,
instead of especially when you look at the data, like you rightly said, when you look at what the government is doing, when you look at what the monetary policy has done, via and via what you see on ground, there's a distortion.
metrics or even indicators are being used to assess whether this collaboration is actually translating into real macroeconomic stability.
Listen, like I said, microeconomic stability in Nigeria will be driven by the informal sector.
Okay.
Now, what we've seen in terms of government policy thus far is that we've seen increase in terms of foreign portfolio participation. We've seen interest in terms of investor confidence, especially when you look at the kind of returns that we've gotten in the equity market, about 42%. You've seen that in sectorial resilience in some of our sector, of our manufacturing sector, or the consumer goods sector, the communication sector, from that high FX losses that were the floating of the naira to the current reality we have seen on ground. So when you look at all that, you realize that what we're enjoying now is largely driven by resilience. That distortion in the informal sector, because the informal sector is the consuming sector of the Nigerian economy. And that sector has not feel the change, the benefit of the current reality that we have on ground. So it will take time. And that's why I'm saying for that sector to feel the kind of change that we're seeing now, there must be a coordinated approach, not just the physical side in terms of dealing with the federal government as a entity, dealing with both the local and the state government, so that you have that coordination. So that for me is the challenge. That is the distortion.
Wow, that's deep. But then how often do the CBN and fiscal authorities share data or even meet to align forecasts and policy targets?
I think you said it in your report, and I think I heard, but though sometimes these meetings are not done for the preview of public knowledge. I mean, they might have been having meeting between the Nigerian Bureau of Statistics, the Central Bank of Nigeria, the Ministry of Budget and Economic Planning. They might be having those meetings, but those such meetings are not known to public view holistically like that. So definitely, but if you want to talk about what we've seen,
Do we still have you? Let's go on a quick break. When we come back,
we've seen that synergy when the minister, then when you look at the Central Bank Monetary Committee, sometimes they drive their data based on what they think they've received from the Nigerian Bureau of Statistics, the MBS. So let's say there is coordination, but again, how, like I said, have we
Mr. Makta, do we still have you? Let's go on a quick break. When we come back, we'll be still be joined with by Mr. Makta Mohammed to give us more analysis on these policy targets. Stay with us. Yes, you are still here on a Business Morning. We're still on the first conversation with Mr. Makta Mohammed. Welcome back, Mr. Makta Mohammed.
Oh, sorry, thank you. I think the network issue. So like I'm saying, we've seen those coordinations, but we've not seen them. We only saw them in public view one, but I believe there is a coordination. Because if you looked at the Monetary Policy Committee meeting of the Central Bank of Nigeria, they always say they drive their decision based on data that have been released by Nigerian Bureau of Statistics. So yes, in terms of data driven, we could see those coordination. But like I said, those coordination seems to be happening in the federal level. I hope hopefully very soon we'll see where the Central Bank of Nigeria will be having meeting with the Ministry of Finance and also with the commissioners and also with the state government on how to drive fiscal policy to turn with what the monetary policies are doing. I think that's where we should be moving to. We so much concentrate on the center. Every Nigeria thinks the president is in charge of virtually everything, but constitutionally that is not the case. So we need to find that bottom line. Like I said, in terms of funding to the 3 tiers of command, it has improved. But when you look at that relative to what we have on ground, very few states can clap their hands and say, we have seen improvement because of the current removal of subsidy, it has effect in our life, it has effect in infrastructure. So that is what we need to see. That coordination needs to come. And first of all, the cost of governance is high. If you are dealing with inflation, you are trying to reduce liquidity in the system, and you're having cost of governance, and today they are traveling for the World Bank meeting in US. The president is going also, is traveling to outside the shore of this country. You have officials goes with them. You have large entourage of officials, and that also result in scarce resources being paid as allowances for all this. But then you are seeing that it seems to not tally with what the physical side is trying to do. I mean, the monetary side intends to do in terms of physical discipline.
Yeah. All right, then away from the inflation and credibility, let's talk about the economic growth and public impact. You've often said stability before growth. Now, how long should Nigerians expect the stabilization phase to last before stronger growth is visible?
Destiny, like I said, monetary policy have done what they have to do.
Okay.
The physical side needs to do what they ought to do so that we can see that growth, especially that impact on the life of ordinary Nigerians. You see, ordinary Nigerian businesses are driven in the informal sector. How much contribution have this informal sector gotten from the present administration? That is what we should be thinking of. How much in terms of cost of loaning, in terms of infrastructural development, in terms of cost of transportation. You and I know just yesterday the cost of PMS has also gone up again. So these are all that have impact on the real economy. The real economy is the real people, the downtrodden, the businesswoman, the Okada rider, the hairdresser. Those are those that are creating more jobs in Nigeria. Those are the sectors that are not really feeling the impact yet because of a lot of physical issues that have not been dealt with. I keep saying physical because it's not in the place of the monetary policy to begin to talk of good roads, security, rule of law. All these are largely driven by physical side. In terms of agricultural value chain, who's supposed to drive it? It's not the CBN. We've seen the CBN intervene in those sides, and you saw what comes out of it. It is more sure in a lot of corruption. So what we need to see that impact that we are seeing in terms of foreign portfolio investors, in terms of investors making a lot of return, in terms of company coming out from the downtown, in terms of employment to improve, we need to see physical policies that drive growth in the informal sector, because that is the key. That is where over 70% of Nigerians find their livelihoods.
Said 70% of Nigerians find their livelihood in many of the small business. Now, I was talking about many small businesses. These small businesses, they say high interest rates are squeezing them. Now, how does the CBN balance its inflation control goals with the need to actually stimulate private sector expansion?
They've started it already, Destiny, and I think we need to give the CBN time. They've started it already. You've seen rate has come down. But what you need to ask yourself again, Destiny, is how many banks are really lending to these smaller businesses? So that is the challenge. Because if you said, oh, what the CBN will do, the banks also are looking at the risks in terms of the economic reality. So their risk management structure needs to be strong. So, and if you looked at the bank, they have improved their risk management structure. So they are not ready to invest in those sectors because they know that the economy reality is very fragile. So rather what you see, if you look at bank earnings, you see that banks are mostly moving into government security for safety, safe engine. They are not investing so much in the real sector. And even when they want to invest, they invest in the already established sector of the Nigerian economy, which is those companies that are already on ground. They see investing in the informal sector, the smaller business, are high risk because they know the economy reality is very fragile. So when you said, oh, what does the CBN have to do? The CBN will cut rate. Now it's not left for the bank. So that's why I said the reality is let the physical side does what stimulate the economy. The bank will naturally key into it because they know that there is real growth, not rebase GDP induced growth. They will know that there's real growth. So once that real growth comes in, you don't need to force them. Rate will automatically come down. They will lend to the real sector. They will lend to the informal sector. They will lend to other sector of the economy. But when you look at the bank but balance sheets. Look at it critically. Realize that most of their income is not largely driven from lending any longer. They look at government security to drive their growth because it's a safer engine, safer room rather than the fragile lending to the informal sector or the real sector. Because consumers,
You've actually said it all. You've actually said it all. But then this last question, are there plans to actually improve communication channels between the CBN and international investors to strengthen policy credibility?
they have to do that and they have to do it fast. And Destiny, if you see what we've seen thus far in terms of stability in the FX rate, slightly driven by inflow from foreign portfolio investors or Nigeria in the diaspora. So they need to come, they need to have that meeting early, especially now that we are seeing those distortion as a result of capital gain, and that they really need to have that meeting if we want to see sustainability, especially in the area of our FX rate. So we need to do that early. I think they should drive that. The CBN have to go on the roadshow because the kind of roadshow we have seen thus far is the Eurobond. We want to call Eurobond, but now we need to go to an investment friendly roadshow to show them our result, our scorecard, how our economy is conducive for them to invest in. But also in doing that, you also look at policy that should attract them, rather than policy that will now will not help will not necessarily enhance them to want to come to Nigeria. So that is what we need to do, because we need it fast. Because when you look at our budget, you look at oil price is low, it's not even meeting the government benchmark. Oil output also is still low. So where you can have that shock that can militate against the external shock in terms of the reserve, you need to attract foreign direct investors. Largely what we've seen in terms of the improvement of the reserve is not necessarily coming because of the improvement in terms of output from oil. That has added. You can see that the non-oil sector is also contributing, no matter how minute it is, to that what we are seeing. So we need to do things fast so that the current success story that we are enjoying can be sustained, especially in the coming years when we go to an election year and possibly we go to this tax-induced year.
Oh, wow. Thank you so much, Mokhtar Mohammed. You've always, given in-depth analysis on issues like this when we bring it before you. Thank you so much for your time. Thank you so
pleasure,
much.
Destiny. Thank you for having me.
You're still watching Business Morning here on Business Day Television Breakfast Show. We will be right back after this break. Stay with us. Yeah, welcome back to our second conversation for today. You're still watching Business Morning on the Breakfast Show. Now, the non-oil exports surged to 4.8 trillion naira, but local investors miss out on Nigeria's export boom. Nigeria's non-oil export earnings have surged to an estimated 4.8 trillion naira, which is about $3.2 billion in the first half of 2025, and marking one of the strongest performances in years. But while the figures point to a booming trade sector, local investors and producers say they are being left behind. According to data from the National Bureau of Statistics and the Nigerian Export Promotion Council, NEPC, non-oil export revenues rose sharply up nearly 400% from 977 billion naira in 2021, driven by strong global demand for agricultural and solid mineral commodities. Behind the impressive headline numbers lies a troubling trend. Nigerian traders and small exporters say foreign-owned firms, mostly from India, China, Lebanon, and Vietnam, continue to dominate the non-oil exports value chain. And many of these companies, industry leaders say they have better access to cheap credit and logistics networks, allowing them to outbid local competitors and capture most of the profits. And now, joining us is Olauton Fawemi. He's a marketing communication strategist. Good morning, Olauton.
Morning, Destiny. How are you?
It's so good to have you join us this morning, especially because today is your birthday. I just found out on Facebook. Happy birthday, Olauton Fawemi. Thank you for all you do for us on Business Day. Thank you so much.
Thank you so much. Thank you.
I hope you have a fantastic celebration. From me and all the team members, we say happy birthday to you. And now,
Thank
very
you very much.
quickly, on policy and economic outlook, Nigeria recorded 4.8 trillion naira boom in non-oil exports. Yet, local investors say they are not benefiting. Now, what explains this disconnect between growth data and real participation?
Okay. I know they say that numbers don't lie. Yeah, that's the truth. But then again, numbers at the same time does not guarantee wins. So you can have a very fact headline, but then at the end of the day, what's most important is how it gets down. And I said in one of my recent interviews, also on TV, that it's about how it's a value chain, and it cuts across different people at different levels. So if the bottom line is not feeling it, then there's a big problem. All right. So the 4.8 trillion headlines shows volume, and most of it has to do with foreign buyers, right? The foreign companies, the large firms are largely involved. But then the bottom line is what's the value capture, right? Repatriation level. We also need to check that. Okay, if we look at the structure of the export business, the funny thing is in 2011, I think I made an attempt, to enter the export business, and I'll probably save this story towards the end, so I don't bore you with that. And I saw a lot of the things that happen in the export business, right? It's not for the faint-hearted, and that's the truth. So those are the things that determine the benefits. The structure, the association in charge of it, NEPC, the documentation, how much of these are our local guys able to work with? Okay, so if multinationals and exporters are able to route proceeds offshore, and retain a foreign partnership, what about the local investors? What about the farmer on the road? On the farm? How much of these funds are they able to enjoy? How much of these exports are they able to participate in? That's very, very important. And that's where the disconnect comes from. Okay. So the boom may be concentrated in some corridors, in some corners. You find out that people who have what it takes to be part of it are enjoying it. But then at the end of the day, if it doesn't get down across the agricultural value chain, then we can't have a conversation. So local SMEs currently, I'm not sure they have the right access to funding, to export funding, warehousing, the right certification. I mean, we can talk about the trillions of naira, but then I'm not sure it gets down to them. So when we're talking about the heavy headlines, the heavy growth in terms of numbers, let's also ensure that we're considering the domestic capture, the value capture. Otherwise, we'll just be chalking out numbers, and at the end of the day, we can't see the value on people who are really, really doing the work, who are on the farm.
What are these export earnings in strengthening Nigeria's foreign exchange reserves if a significant portion of proceeds is not being repatriated through official channels?
I mentioned about repatriation, the process earlier.
Okay.
The export figures matter, okay, but the reserve benefit, right, is only when the proceeds go through the official channels. If you look at our borders, a lot, and that's the truth, let's not hide from it, a lot of export, how are we even sure that they are well documented and they are going through the right channel? Okay, if our earnings stay offshore and are settled via parallel FX market, the boost to official reserve will still be limited because we can't trace it. We can't. it boils down to structure. Okay, it boils down to structure. When we talk about reserve rise, if we want our reserve to rise and we want to do it through export, we need to look into repatriation. We need to look into repatriation, the selling, the conversion, typically when we export, there are policies that guide how there's a certain percentage that you even have to keep locally and all of those things. And now who's checking all of that? That's very important. When repatriation is low, whether I don't know whether the process is not smooth, there are informal settlements, the NXP process is slow. At the end of the day, the official reserves will be impacted. It's either we're overstating it or we're not getting the right value, the right figures from what is coming from export. So if we must make sense of all of this, we have to strengthen repatriation rules and ensure that NXP process is streamlined, it's seamless, and it is well documented. At the end of the day, execution, not just reading out of the policies, but execution at the end of the day is what matters most, if you ask me.
Yeah, you just said execution is what matters most at the end of the day, right? So how can execution matter without financing and competitiveness? Okay, now talking about financing and competitiveness, right? Local exporters consistently cite poor access to affordable credit. Now, how is the government addressing this financing gap?
So the thing is, like we did say, that the chunk of what we see in these figures are controlled by large firms and foreigners. That's because financing is not very available and accessible to local exporters. I did say earlier that I made an attempt at exporting. No, there are targeted windows, right? Next thing, with the CBN export funds, SME facilities, they are there on paper. But how much of this are our small and medium exporters or anyone in the agricultural value chain, how much of these things are they able to access? What's the uptake? What's the scale? What are the bank accessibility? How are you able to access the bank? These are still real challenges. And it's easy for us to say that all of these funds are available on paper. It's easy to even go on air and say they're available. But the bottom line is, when you now get there to access it, what do you get? Do you understand? So these things exist, but I think that we still have a large bottleneck, a very, very steep bottleneck in terms of distribution, in terms of the risk, the collateral. We need to improve. So if we must get around this, we need to improve credit guarantee. We need to improve the risk. We need to improve accessibility. More financing help has to come from the private sector. We need to improve uptake across board, whether it is from the CBN or from commercial banks or from a private sector. We need to reduce the bottlenecks and increase accessibility to local exporters.
Talking about increasing accessibility, and anyways, okay, let's leave that for now and just delve into the specific reforms that are being considered to level the playing field between Nigerian traders and their foreign counterparts.
So I think largely trade facilitation in terms of tariff rationalization, certification, access to the markets, all of these are things that improve export credits insurance. Okay.
Yeah.
And first off, education. And when I say education, I don't mean going to school. Most of the local exporters are not even aware. Most of Nigerian traders, the farmers, are not even aware of most of these things that they exist. And that's an advantage that the foreign counterparts have over them. So when we talk about all of these things, whether we want to reduce non-tariff barriers or improve the dealings at the ports or the customs, because that's also a bottleneck. Because there's nothing you want to do now that doesn't go to the port, or you have to pass through customs. And some of this very bureaucratic approach just kills the dream, just kills the attempts that people make, in diving into to the export business. So when these reforms are in place, there needs to be adequate information, education that goes to the players in the export business. That there are insurance schemes that are available. You can have more localized content rules. It then now creates space for more Nigerian players, because if you look at it holistically, larger firms have an advantage in terms of funding. They're bringing forex now, so they have an advantage. They have the connection. They can speak to who matter and they get things done. The average person in the average local exporter may not have such. So if there must be a balance, we must create more room for the local guys to be able to play. And this they cannot do on their own. All the agencies, all the sectors that are involved, whether it is the association in terms of export in the first place, in terms of financing, the commercial banks, the CBN itself, we need to educate our local team that there are schemes that are available for you that you can access to do whatever it is you want to do, and make it easy for them to access them. It's not just about saying it is available, it's about making it indeed available through access, if you know what I mean.
Oh wow, that's good. Okay, now talking about value addition and even industrial development, right? Okay, most of Nigeria's exports are still raw materials. Okay, now what
Exactly.
policy steps are being taken to actually encourage value addition and even local processing?
So here's the thing, it's a bit sad, and I'll tell you why it's sad. Most of our exports are raw materials. Look at this. We have the raw materials, whether it's cashew,
Yes,
uh, what have
cocoa,
you, cocoa,
lithium. Yeah.
all of these guys, sesame seeds, we have them raw. Hmm? It breaks my heart, because when we take these things out, they are processed abroad,
There and brought back to us.
brought back, and then we are buying it. We are using forex to buy.
Yeah.
And now the challenge is, if processing happens here, what we have done is, one, we have kept those
The values
products within one.
within.
We have processed them by ourselves for ourselves, and then getting them back will be, say, in the same currency, because they are here, right? Then we will not be talking about shipping. We will not be talking about, because at the end of the day, just imagine that if there were factories where we process cashew or palm kernel. If there were factories where we process that, can you imagine how many people will be working in such factories?
Exactly. Job opportunities.
Can you imagine? Yeah, so we're talking about job creation, we're talking about value creation, we're talking about keeping our funds in here and attracting forex, right? The only way you can attract forex is if you're producing. The problem is, we're attracting forex from the raw materials, which is way cheaper,
Way cheaper.
right? If you can make 13 million or $1 billion from selling raw material, you can actually make up to 50, which is about 3 times when you've processed it and you're selling. Okay, so when we're talking about tariffs, incentives, infrastructure, if policies are not marrying them, there's a problem. There's a problem. So
Wow.
protective tariffs on key raw export has to come in place. We have to develop infrastructure within, okay, the country that helps us to process, such that whether at the state level, local level, federal level, private, public and private partnership, when we are putting all of these things together, we are reducing investment risk. We are keeping our own funds within our own shores. That way, we're not selling the raw materials, waiting for our foreign counterparts to process and make good, and then we are shipping it back home.
True. Sure.
And agriculture is very, very significant, because you can't, everything that comes from agriculture, we can't do without it. Whether it's at the raw state, at the processed state, whatever, you can't do without it. You must eat. Before you eat, you must plant. Before you plant, you must have seed. Before you have seed, you must plant. And it just goes round in circles. So across the value chain, if we're not deliberate about ensuring that these things stay home, right? At the end of the day, we will have issues with industrialization,
Oh, wow.
employment, and even foreign reserve, to be honest.
You've said so much on this, but then are there ongoing partnerships with private investors to develop agro-processing zones or even industrial clusters to even boost manufacturing capacity? What lessons can you, bring out from this, or can Nigerians learn from this?
I think yes, actually, we've heard of different partnerships between private investors and the government. The most important thing for me, at the end of the day, I always say, is scale and accessibility. The government partners with multilateral organizations, private investors, and we see a lot of move towards creating agro-processing hubs, and some industrial clusters. But at the end of the day, it is scaling through the supply chain. That's the most important thing. So if we've been able to do 100 in the last 1 year, how do we get to 1,000? How do we get to 2,000? Okay. So if there's a lot of support from the AFDB, the state governments are also very deliberate about industrialization, then we'll be looking at how we keep our product. And Nigeria is very blessed. That's everybody
Very
knows.
blessed. Yeah.
We have the land, we have the weather, we have the products. We have the products.
We
The
do
challenge
actually.
is infrastructure. And when we're deliberate about it, that's when we see a lot happening across board. Why do you think there's urban migration? Because there's no, and that's where development should actually happen.
Exactly.
Because in our local city hubs, towns, we have the farm, we have the land, we have the manpower. So if there's development there, if export incentives are directed towards that place, if they are protected, because now the issue of kidnapping and what you call this, banditry and all of those things
terrorism,
are chasing them off the farms. Now,
yeah.
if we can deal with those things, export incentives are being utilized well. We're developing the skills of people in the rural areas. We're building the infrastructures to ensure that whatever it is we're producing are well. Go and check out Vietnam, check out Malaysia. I've been to China. I saw a lot of things. You know how they say, right? Beg your pardon. The money that you create in a place should stay there. That's the only way you keep money that belongs to a place in that place now. It's by rotating it.
Wow.
Before before a country can say we are shutting down a global, we're shutting down from accessing a global site, it's because they have built one that they can depend on, and they know that everybody will use it and it'll be fine.
Wow.
So let's look at transitions. They have to be successful.
Exactly.
Incentives, they have to be selective. They have to be invested back into logistics, training of human capital, building companies, industrialization. Whether you want to partner with private sector, Nigeria needs to do more, please. I'm not just reading out big numbers on the.
I can see the passion in your voice. You're
Honestly,
not
we've
happy
gone past
about.
that.
You're not happy about where we are right now in this export
Honestly,
thing.
we've gone past
But I
that.
can assure you, a lot of it's going to be better. It's going to be better. There's a lot of education. There's a lot of education going on this, and people are getting more aware of this. Now, because of time, I would have asked you more questions, but because of time, we would be unable to, go on and on. And I want to thank you so much out of a busy schedule, and being that it's your birthday, that you could, talk to us on Business Morning. Thank you so much.
Thank you,
Alato Fawemi. He is a communication expert, a marketing communication expert, and a businessman to the core. Thank you so much for your time, and happy birthday once more. Have a great day, Mr. Alato.
Thank you, Destiny.
And that's it for Business Morning today. Thank you for staying with us as we track the latest trends shaping markets and the economy. Remember, business decisions are stronger when backed by the right information. I am Destiny Mahmoud. Stay tuned for more updates on Big Story by Elizabeth Musa. And join us again tomorrow for another edition of Business Morning on The Breakfast Show. Good morning.